Ladies and gentlemen, good day and welcome to Wpil Limited Q1 FY24 earnings call hosted by Wpil Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Archit Shah from Batliwala & Karani Securities India Private Limited. Thank you, and over to you, sir.
Thanks, Yusuf. Good evening, everyone. And on behalf of Batliwala & Karani Securities, I welcome you all to the Q1 FY24 earnings call of WPIL Limited. We have the management today being represented by Mr. Prakash Agarwal, Managing Director, and Mr. K.K. Ganeriwala, Executive Director. Thank you, sir, for taking the time out. I now hand over the floor to Mr. Prakash Agarwal for his initial remarks, post which we will open the floor for Q&A session. Over to you, sir.
Good evening, everyone, and welcome to our earnings call for the first quarter of financial year 2024. Firstly, let me thank B&K Securities for hosting this earnings call. Let me first give you a brief introduction about the company for some of those who might be new to the company. WPIL was incorporated in 1952 and is a multinational pumps and system company headquartered out of India. With diversified operations covering the entire gamut of the pumping industry, with the company's rich experience of 71 years in designing, developing, manufacturing, erecting, and commissioning of pumps and systems. Over the first 50 years, the company focused on developing its core technology of centrifugal pumps and building a robust manufacturing infrastructure to support its business. This was built in tandem with India's industrial growth, and the company is proud to be a major part of the conventional power growth story. After consolidating our position as a leading pumps and system company in India, we expanded our operation globally through various inorganic acquisitions in Italy, France, Switzerland, South Africa, Australia, and a joint venture in Thailand, which have strategically turned around and integrated well into the group. Today, we have 12 global manufacturing locations covering the entire process of pump manufacturing, and we develop a long-standing tradition of producing specialized engineered pumps for various commercial end markets. We then established our turnkey project division to provide end-to-end flow solutions across various industrial, irrigation, and municipal sectors. Looking ahead, we envision good growth in both our core markets, engineered pumps and turnkey projects, as we become an integrated flow solutions provider. With that said, let me take you through the consolidated financial performance of the company for the first quarter of the financial year 2024. The company continued to deliver consistent performance in line with seasonal revenue streams of the business. For the first quarter, the company reported consolidated revenues of 358 crores, an increase of about 20% on a year-on-year basis. EBITDA stood at 66 crores, which grew about 29% year-on-year, representing an EBITDA margin of 18.6%. Profit after tax stood at 40 crores, witnessing a growth of 34%, with PAT margins at 11.3%. For the segmental performance of the first year, the product division revenues stood at 214 crores, representing a growth of 6.5%, with EBIT margins of 21.6%, while the project division revenues stood at 144 crores, witnessing a growth of about 46%, with EBIT margins at 27%. On the operational front, project execution focus is on track with good traction and strong growth expected in subsequent quarters with the Jal Jeevan Mission projects on high priority. The defense business is a new area which looks very prospective in the medium term based on new product developments. The international business continues to remain steady with growth, particularly in the Australian business based on our strong order backlog. Lastly, as you may have seen, on 6th August 2023, WPIL's European subsidiary, Grupo Turia, entered into a binding share purchase agreement with Nucleo France for sale of its interest in its nuclear business, consisting of the Ruchi subsidiaries, Pompe Ruchi France and Ruchi Fluid AG, Switzerland. In 2022, nuclear was declared as a green energy by the European Commission, which led to a large number of reactors being planned in Europe. Furthermore, in parallel, there has been a major thrust on decentralized nuclear by small modular reactors, wherein it is proposed to develop a large number of factory-built modular reactors at multiple locations of 300 to 400 megawatt size. These two developments are leading to growing interest in nuclear technology and a type of nuclear renaissance in Europe. From Ruchi's perspective, the team, while evaluating the prospects, realized that due to the sudden ramp-up in upcoming capacity, the industry will consolidate, with either product-wise consolidation between suppliers or vertically integrated players controlling the entire supply chain. In light of this, Ruchi appointed advisors and started exploring various opportunities. Finally, Ruchi entered into a binding share purchase agreement with Nuclear, one of the strong integrated players, confident of having delivered optimal shareholder benefit. The management of WPIL considers it a win-win scenario, wherein Grupo Duria could use the substantial cash reserve to focus on various inorganic opportunities in their core business of industrial and water pumps, while Nuclear will benefit from the core expertise of Ruchi in nuclear pumps. And finally, Ruchi would benefit from access to new growth opportunities in the SMR segment and new technical expertise. With that said, we can open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Meet Karodia from Niveshaay. Please go ahead.
Hello, good evening, everyone. Sir, first question is on the pump side. So, where the demand is coming from in the pump side?
Sorry, where the
demand is coming from for the pump side, pump segment.
Okay, you finish your question, then I'll answer.
Okay. Second is also what is the portion of pump in the project business? Like if project is of 100 crores, then how big is the pumps? Third question is what are the other major expenses in the projects?
Okay, so basically the pump business is about 60+% of our revenue, 60-65% of our revenues, and the pump business has lots of growth areas. We are present in the entire gamut of pumps, which is roughly from 5 horsepower to 50,000 horsepower, and across various segments. So primarily today itself, the Jal Jeevan Mission and the water supply schemes in India are a major area. The oil and gas segment across the world is booming because crude oil price is very high. Then the industrial business is also doing very well because there is with the inflation and higher prices, we are seeing good traction there also. So all segments are doing well, and that's why we see a good growth for us in both domestic and international markets.
Okay, right. So also my last question was, what are the other major expenses in the projects?
Yeah, in projects we are doing turnkey. There are 2-3 different types of projects. When we do distributed systems, like in the Jal Jeevan Mission, distributed water systems, there is a lot of piping. So in all our projects, there are pumping systems, there are treatment plants, there are piping, and reservoirs, civil reservoirs. So it's the percentage changes depending on the type of application.
Okay, and the last question is, can you provide what is your vision for the next 3 to 4 years? Any kind of targets you can share?
I cannot share targets. I don't want to share targets. But as a company, like we had mentioned in our end of 2023 results, in March results, we have now got a very strong base across our businesses. That means our 3 main areas. One is the domestic product business, the domestic project business, and the international product business. All 3 are well established and mature, with steady and good margins in the range of 15 to 20% EBITDA. With this said, I think we see a good growth because there is a big demand for, like water is becoming more and more of a demand area. And secondly, I think with the strong balance sheet now, we are aggressively going to look at inorganic growth areas also. So I think the basic is the growth in the key end markets and also the inorganic opportunities which we present to ourselves.
Okay, sir. Thanks so much and all the best for the future.
Thank you.
Thank you. Next question is from the line of Gauri Anand from Old Bridge Capital. Please go ahead.
Thank you so much for taking my question, and congratulations on good set of results. Sir, I have a couple of questions. One, recently we happened to read that the government could allow private sector participation in nuclear power projects. I would like your comment on this. Second, the small modular nuclear power projects of about 200, 300 megawatts. This as also, that India is now, expanding from 7 gigawatt to 22 gigawatt on the nuclear side. If you could help us, drop an opportunity for the pumps, both on the primary opportunity as also the secondary opportunity in India as also globally. I mean, how should we think about all of this? If you could help us, that would be nice.
Actually, madam, unfortunately, we, entered into this agreement to sell our nuclear business.
Okay.
So, we will be hopefully closing this transaction by end of December. And our nuclear business will be part of Nucleo, which is an integrated, SMR reactor company. So we decided that the valuation we were getting was a good opportunity to exit this business. So therefore, I would not like to say more about the prospects.
Okay. Okay. And so this minority, this number has been slightly going up. Could you help us understand, what is the, just a minute, yeah. What is the share in that subsidiary?
Yeah, actually, this is same. There is no change in it for the last period, I think 3, 4, 5 years. There is the subsidiary in Singapore earlier was struggling, and therefore the promoters have a share in that. So that is the minority interest. So where WPIL has 60% there, and the promoters have 40% in the subsidiary in Singapore, international subsidiary. And we are looking for an opportune time to, unravel this. But it has not changed. There is no change in this at all.
Okay. Okay. Well, thank you so much, sir, and all the very best to you.
Thank you. Thank you.
Thank you. Next question is from the line of Jatin Damania from Kotak Securities. Please go ahead.
Thank you for the opportunity. So just wanted to understand the breakup of the order book in terms of the project, Indian products and international, and of that total quantum, what will be the O&M part of it?
Yeah, so that's the total order book roughly is in the domestic order book is about 3,800 crores, and the project is about 3,500, and the product is roughly 250-300 in that. And in the project, the O&M is about 600 crores. And the international order book is about 809 crores.
And sir, this O&M of 600 crores is spread across 15 years, or is it probably lower than that?
Yes, it will be across. Some are 5, some are 15, some are 10. So it's an average is about 10 to 15. And this is across that period. The new projects will be more added to this. These are, as you finish the project and hand over, these will start.
Right. And sir, two questions on the overseas business in terms of the international opportunity, that it's largely a product-driven business. So one, just wanted to understand the opportunity that can come from the Australia, from the LNG side. And secondly, we were also looking for some acquisition in the South African market. So you can throw some light on both these things.
Right. So, good questions. I think the Australian market has become a major growth area for us. We were very fortunate to buy into the oil and gas. This is the only oil and gas pump producer in Australia. We were fortunate to buy that, and there is a big expansion across all the refineries and also the LNG terminals which are coming up there. So we have a huge order book of new projects in Australia. And the South Africa has got a lot of prospects, because a lot of resources are there, and we are very strong in the water sector, and they need a lot of water projects. But the government has been struggling, and somehow the political situation is not stabilizing. But the margins are good, the business is good, prospects are good. I hope near term it will stabilize.
Right, but when Australia is a big opportunity, so do we need to carry a big capex to set up the plant in Australia? And that's the reason that we are exiting from the good opportunities which nuclear energy was showing?
No, we will use this. Our businesses are well capitalized and we don't need capex for them. So the important thing is that we are looking at this to build a strong cash reserve. I think in the present environment, one must understand very high interest rates. Suddenly, if you're working in international markets, like in Europe, the Euribor has gone from minus 0.5%. That means you are borrowing as a company at about 1%, 1.5% interest, to today 4.5% Euribor. So the interest rates are very high, and it's not a time when you want to be running short of cash. So that's number one. And secondly, there is a lot of inorganic opportunities. So we are not going to use the funds for capex, which is not required at all. We are going to look at, or we are looking at a lot of inorganic opportunities which we can use these funds for without borrowing.
Okay, sir. Thank you. That's all from my side.
Thank you. Next question is from the line of Dixit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Thanks for the opportunity. Can you hear me?
Yes, we can hear you. Please go ahead.
I have 2-3 questions. So, firstly, in terms of project business, so this 2,900 crore order book, let's say excluding the O&M part, it will be executed over how much period? That's the first question. And in the similar thing, the project business, does it have any cyclicality? Like generally in the EPC companies, we see the second half is much stronger than the first half. So that's
Sorry, let me start. So the project business, as you said correctly, is cyclical in nature because of the monsoon and the construction cycle. The second half of the year is the real performance. So typically that is 60% or even higher, every year because of the monsoon effect in the first and second quarter. So, like in the first quarter, you don't want to ramp up a lot because the monsoon will affect your performance. And from now, second quarter, it starts picking up. That's one. And this gives us a lot of visibility, the project business. Our execution last year was 800 crore. And as we have an order backlog of, 3,000 crore net contracts, so which are typically to be executed in 2 years' time, to 24 to 30 months. So I think we are focusing on a big ramp up there.
Okay. Secondly, in terms of the product business, so we have almost 800 crore order book in the domestic, international, and 300 crore order book in the domestic market. So usually the product business, the execution cycle would be less than a year?
Yes, this is, so these are commensurate orders. They are, relatively short term, except for some longer term, but even the longer term is 12 months to 18 months maximum.
Okay. And lastly, one on this group Atoria transaction. So I assume that this 600 crore we will be receiving, and that will be, so as you have mentioned, that will be used mostly for the inorganic opportunity, and we are not planning to bring that fund to India or anything like that. So, if you can throw some light, so inorganic opportunity in the European or US market only, or we are targeting something in India as well? In that company, you have mentioned in the press release that last year it has a turnover of 200 crore. Can you give us how much was the profit of that company?
Yeah, I can give you that. First is that I would like to clarify that we will wait for the transaction to happen before we decide how to use the funds. So we are not clear whether we will bring the fund here or there. So, that is not a subject to as of today. Second is, we are looking at inorganic opportunities in India and abroad, so both are open for that. We just see the environment. There are no concrete plans, no conclusions yet, and no clear usage for the funds. We will let the transaction happen and then, make these decisions. Secondly, this company was profitable last year. It had an EBITDA, Ruchi had an EBITDA of 56 crores and net profit was 41 crores.
Okay, 41 crores.
12 times EBITDA, roughly, you can take it.
Okay, because if I see the annual report, the Atoria Group revenue was 800 crore last year, and it has a profit of around 80 crore. So you are saying that even though the revenue was 25% of the Atoria Group, the profitability was almost 50% because it has a very high margin business.
Yes, that is true. Basically, the numbers I'm not saying. I think your numbers are a bit different from mine, but yes, that is the fact.
Okay. And last question, in terms of project business, any more tenders we are evaluating in the India, Jal Jeevan Mission in any other states around, or right now the focus is more on execution?
We are working on tenders and, the pipeline is very good, very strong, and we are balancing. I want to say that we are not doing only execution. I just want to say that we are working on with an execution focus. That means execution ramp up is important. The orders are there if you want.
Okay, that's it from my side. Thank you.
Thank you.
Thank you. Next question is from the line of Prateek Jain from Solidarity Investments Manager. Please go ahead.
Yeah, hi. Am I audible?
Yes, please.
Yes, you are.
Yeah, thanks for the opportunity. So I just have one quick question. Do you have any plans to enter into mechanical seals category?
Sorry, can you speak again?
Do you have any plans to enter into mechanical seals category?
Mechanical seals?
Yeah.
Sorry, I'm not clear.
Hello?
Yeah, mechanical seals.
Mechanical seals.
Oh, mechanical seal. No, we have no plans for mechanical seal.
Yeah, okay.
Even if you are looking at inorganic, we are, looking at mostly pump businesses inorganically.
Okay. Thanks a lot, sir.
Thank you.
Thank you. Next question is from the line of Darshil Jhaveri from Crown Capital. Please go ahead.
Hi, so good evening, sir, and thank you for taking my question. So most of my questions have been answered. I just have one question. So regarding our divestment, so that would be reflected in our current results as the revenues and profits are getting reflected in our current results, or they are not being reflected?
Okay, that's a good question. The share purchase agreement is precedent. There are certain conditions precedent to the sale. So, like we need certain government approvals. So once that comes through and the closure happens, then we will take necessary actions to discontinue the business from our results. Till then, the business continues to be on our results.
So, sir, if I may, sir, how much kind of revenue and profit has that contributed to our current quarter?
It's in line with the past. So if it's the same line as the past. I don't have the exact breakdown because, but it's in line with the past. For example, I have something I can share. It's about 40 crores and about EBITDA of 6.6 crores.
Oh, okay, sir. That helps me a lot, sir. And sir, I just wanted to ask, sir, we are talking about growth, sir. So qualitatively, what kind of growth, you could, help us out with all the sectors that we are in, and any risk that, you feel that, due to the global environment, some headwinds that can, come our way, or some tailwind, not any guidance specifically, but maybe, some qualitative color that, that could help us, sir.
I think the important feature that's pointed out in my, in the highlights is that one is the project business and the Jal Jeevan. The Jal Jeevan mission is on a fast track. It was scheduled to be completed next year. I think we have a year's extension there, but the government is really focusing on it. It's a high priority area. So we are also under pressure to execute. So that should boost and bump up our project revenues. And secondly, the oil and gas is surprisingly becoming a very interesting bet for us there. These are the two major areas. But otherwise also we see, good traction in our aftermarket business. We have a very good, because industrial production is better as such. Only thing is the MENA region, there are, like countries like Egypt, Iraq, etc. There hopefully some stability will come, financial challenges are there, and that will lead to further new growth. But it's a postponed growth, and I see, everything is positive. There is no, worry as such.
So that's great to know, sir. And sir, one last question. Sir, as we said, a lot of revenue can come in the H2 as projects get executed. So will our margins also, we will get operating leverage because the fixed cost will remain same? So can we assume that we'll have higher margins like last H2, or how would that operate, sir?
So principally, yes, as the revenues pick up, we should have operating leverage. But the margin fundamentally, let us say that we, want to stick to, as a management philosophy, to be within 15 to 20%. So, it's a mixed bag there. So we will be in that range, well within that range.
Oh, okay.
There are a lot of fluctuations through the times. So, even accounting for everything, we will be in that, or.
Okay, sir. And sir, I just wanted to ask one more question. Do we have any problems in passing on raw material costs, like any fluctuations? How does that impact us? So, we can pass on the increase and decrease as well. So are we protected on that front?
Yeah, we are. So all our projects are principally with price variation clauses, and that's a good area which is, we are very careful about that. As earlier elaborated upon, we are very we are not taking too many projects. We are not hyper aggressive on booking projects, and these are good margins. And to sustain these margins, we are selective. And price variation clause is one of the criteria for our selection.
So that's helpful. Thank you so much, sir. So all the best for future caller. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. Next question is from the line of Devansh Nigotia from Simply. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, regarding our tie-up for the SMR technology, can you help us understand in comparison to traditional technology, how does the opportunity size differ? And also let's say in traditional technology, you have coolant pumps and secondary pumps. In SMR technology, how does that scale change? Let's say, for example, 300 MW of nuclear project. And also, how does the entry barriers are there in comparison to your traditional nuclear pumps? So some thoughts if you can share over there.
Sure. I just want to clarify again that we have sold our nuclear business. It is a share sale. We are selling our interest in the nuclear business to Nucleo, who is in the SMR technology, and they will be owning this company after the transaction is closed. So we are exiting the nuclear business upon closure of this transaction, and that's why I cannot speak much on this now.
Okay, but sir, that is actually what I was trying to understand, that the thrust incrementally is on SMR, so why did we sell the business? I mean, everybody's talking about SMR technology, so,
To put it in the correct perspective from our management perspective is that we have been in this business for long. We understand our group of Turia has been in the business for long, from 2006 they own it. We have seen various cycles in the sector, and we think that this sector will consolidate. So you will have a lot of big players. It will lead to acquisitions or transactions for consolidation. So say one EPC contractor like EDF will want a limited number of suppliers to expedite the projects. So it would have meant that we have to invest significantly to stay competitive. And on the other hand, we were getting a very good valuation to exit. So I think we weighed those two and took this call to exit this opportunity.
Got it. And sir, regarding the commentary on oil and gas, so is it in India or globally that we are seeing strong demand, or how is that shaping up?
Yeah, it's globally. Primarily, our businesses are in Europe, which caters to primarily the Middle East region, and also in Australia. Both the businesses are globally. In India, we are participating. India has more downstream business, and we are participating in the downstream business expansion. So positive all around.
Okay, got it. Thanks a lot.
Thank you. Next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yeah. Namaskar, sir, and thank you for the opportunity, sir. You did mention that you will be unraveling the Singapore subsidiary on an opportune time. So could you dwell more? What are you trying to explain, give reference?
Namaskar. The only thing was that the shares are owned by the promoter, so it would mean a cash outflow from WPIL. So whether that is the best use of the cash, we have to evaluate. That is it's a simple transaction.
Okay. So currently, how have you done any valuation for this subsidiary?
You can imagine that with this new transaction, the valuation will go up.
Okay. So, are you? Does this give an inclination that the sales proceeds from this transaction can result in another transaction and finally the fund going to the promoter? This is how it will
No. This is not. That's what I'm trying to clarify, that this is coming from your end. We have no such plans because we are clear that we are looking at growth, and this is not a agenda item.
Okay. Right, sir. And sir, if we take this project business so for this year, you have alluded to the fact that we are looking for 15 to 20% revenue growth for the project business for the year as a totality, and 10 to 15% for the pumps and accessories. This is what should be the ballpark number, the revenue growth.
So I cannot indicate anything there, but as I mentioned, that there is good traction in the businesses right now, and we have shared the first quarter, and let's hope it continues.
Correct, sir. And sir, earlier we had at the time of COVID, I think so, because of the cost escalations, we changed our auditor also. So going ahead, sir, when is our term for the current auditor, and can we look at for hiring again the big five and going for more internal settings, because now the organization will strengthen and more bandwidth is needed. So when is that renewal due, sir?
I will just answer that we have 2 years more for the renewal. We will evaluate the best option for the company going forward. But our present auditor is very capable. We are very satisfied with them. It's more about the matter of service also. It's a time, their time commitments. Some of the big auditors have less time for some companies.
Right, sir. And last point is on the UP government, the participation in this Jal Se Nal scheme part, sir. So out of this total order book, especially from the Jal Se Nal scheme, do we have a larger pie from the Uttar Pradesh government, or is it evenly spread across Madhya Pradesh, Uttar Pradesh and other geographies?
So we don't work with Uttar Pradesh as of now. We are working in 2 states primarily, which is Madhya Pradesh and West Bengal, and we have enough work from them. And why we selected these? There are 5 states which are lagging behind. Madhya Pradesh, West Bengal, UP are 3 big, and Chhattisgarh. So I think we are very happy with the work we have now, and there is tremendous enough jobs for us going forward.
Right. Thank you, sir, and we hope that this transaction culminates and there is better utilization of the funds, also a part to be distributed to your investors in maybe, but time can only decide. Thank you, and all the best, sir, for this transaction also.
Thank you very much.
Thank you. Next question is from the line of Amit Chodia from World Food LLP. Please go ahead.
Sir, could you talk about the new defense business that you put in the slide, like how large is it and what kind of products are we developing for the same?
Yes, that's a very interesting area. That it's the government is coming up with a large number of new naval ships, and they have been already contracted, and we have worked on new product development there, and we are expecting some good news, and we will elaborate further when it happens. But today I can say that it's a very prospective area, and we now have the products for it. So we are very excited about this opportunity.
And is this in the near term, say in the next couple of years, or this will take time for approval?
Yes. Because it's a short term to medium term opportunity.
All right. And would it be right to say that we would continue the same growth run rate for the rest of the year, or we kind of could accelerate on the growth? I know you don't give any projections, but would we be growing at the similar pace that we did in Q1?
We hope so. What I want to say is that, yes, I think things are looking good, and we have to see how things go. But the order book is good and strong, and the team is focused.
Lovely. All the best, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Pratik Salgia, an individual investor. Please go ahead.
Good evening. Congratulations on a great set of numbers and excellent execution. I just wanted to understand if we have capabilities to be a part of pumped hydro storage project opportunity in renewable energy space, and if the answer is yes, are we bidding on any of those projects? Thank you.
That's a good question. We have the pumped side of it. The pumped hydro, unfortunately, has a generating side also. And this is primarily BHEL and a company called Andritz. They are the 2 major players in this segment. So we are not in the generating side. We are in the pump side. So we have the technology, but we are in the pump side. This has 2 sides. It has a pumped hydro, and then it is used for generating also. It is, both sides.
Right. Yeah. I wanted to understand from the pump side because.
Yeah. So one is not enough. We cannot bid with one. We have to have both.
Understood. Okay. Thank you.
Thank you. Next question is from the line of Janish Shah, an individual investor. Please go ahead.
Yes, sir. Thank you for giving this opportunity. Just wanted to get some more color on the bid pipeline which you're looking at. You said you have a very, very strong bid pipeline, but if you can just share some number and when you said you have enough opportunity right now within existing states with MP and West Bengal, does it mean that we will be very choosy or we'll be very, very conservative or maybe a little bit selective in going to other states? Why? I mean, is there any particular reason why we should be having a little more focus on particular states because of the infrastructure or the build-up which you have in these states right now?
So clearly, I would like to absolutely clarify that one of the basis of our company.
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर ठेवला.
Hello?
Yeah, sir. I can hear you, sir.
So one of the basis of our company is that we want to be a flow solution provider, and in that we have certain benchmarks we try to use by which we can be a good, have a lot of capability in this segment, get good growth as well as preserve margin. So we don't want our project business to keep growing out of sync with our portfolio. So our project business has a particular segment and we want to now grow the product business to match that. So therefore, I think we are, we have to do projects which are commensurate with our requirement. It's not that we will take whatever comes our way. So because that will distort our overall business policy. Secondly, we work in 2 states, as you said correctly, because our infrastructure can be, it's optimally utilized. If you diversify across too many states, your costs go up, operating costs.
Okay. And second, after, like I was saying, last few years, I think the company has acquired position in many of these international ventures and have nurtured them to reach to a level where they are today. Obviously, you have now encashed the one, but when we are looking at in a broader sense, for a strategy, I can understand the opportunities which are there right now in India and you are well positioned. But when we are looking at as an international, how is the strategy going to work? In a sense, like, does these businesses have a good growth potential to hold you, or you will, the businesses generally, it has taken a lot of time for you to reach to this profitable stage. So that is the reason why I'm asking, how do you look at the overall strategy into this?
So the pump business is not unidimensional. It is spread out across one segments. Now, there are lots of different products in the segment. So one classification in the pump business is centrifugal pumps and positive displacement pumps. Then again, in centrifugal pumps, you have an industrial segment, an oil and gas segment, a water segment, and a sewage segment, different segments. So if you take care of the different segments in the business and the 2 major classifications of positive displacement and centrifugal, then further if you add geographies, each country has 1 or 2 or 3 players in there. So I think our aim is all the businesses we have are a sort of a leader in their particular segment or geography. And that is our forte to keep building on those. So when we do a transaction, we are looking at a similar advantage.
Okay. And on the financial matrix, is there anything which you are, which you think it makes sense, or is there guardrails which have been drawn by the management? Because when you sold right now, you said it's 12 times EBITDA, which obviously is a very healthy valuation which you've got. But when you're looking at purchasing some of those companies, what kind of metric you would be looking at then?
I think it's a mix of growth opportunity versus valuation. So we look at both and what we can do. So growth is what we can add synergy and grow it. And it is we are looking at very good valuation. So, we are very conservative with our cash.
Okay. And maybe that's the last on the follow-up which you had earlier asked. Is there any number which you would like to put to the bid pipeline right now?
No, on the bid pipeline, as I said, it's commensurate. I want to say that we need, it's very clear that if you see the order book versus the execution and the time frame of execution, the one factor was that there were a large number of projects booked in the second half of last year. So we need to ramp those up and get them aligned with the client requirements and contract requirements before we can aggressively add more. We don't want to get to a point of failure. Okay. So, what I meant to say, the challenge is on the execution side, not on the contract, on the bid values.
Okay, understood. Thank you very much, sir.
Thank you.
Thank you. We have our next follow-up question from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Sir, out of the total order book disclosed, what would be net from the sale of the unit? How much will be attributed to that?
Roughly about similar to the revenue, so you can take about 200 plus crores out of 800 crores. But as I said, that's a moving ballpark, and we will know only when the deal closes. So we have to wait for that.
Sir, and small suggestions are going ahead. If you could provide the order books split up in the form of domestic and international, and then the OEM part projects products split up, so that would give us more the entire. This comes into discussion every time. So if you could therefore provide it on a slide, this will suffice a lot of questions and will save a lot of time. So
today we have got domestic and international. And international we have a breakup in countries. In domestic, yes, we will now provide product and project also, so that you can see that breakup there.
And O&M part also, sir, because that's a very strong component.
Good point. So I will put project, O&M and product. You're right.
Okay.
Next point.
Yes. Right, sir. And sir, for this subsidy sale, which is going now, as you have told that when it will consummated, then only we will be knowing. But what kind of tax incidence would be there? And I just wanted to understand how much is our investment, because the sales realization we can take from 68.7 million euro. So what is our investment, and what kind of tax incidence are we going to is going to be there?
All I can say right now, or I want to say right now, is very tax efficient. So we have worked on that, and let us wait. We will know shortly.
Right. And last point is on the finance cost part, sir. We are doing a big business. We are growing the business, but when we look at this finance cost, it is not to be mentioned also. It is hardly any proportion. So how do we manage this size of business with minimum finance cost? Just to have an understanding, that finance cost is also built into the how is it baked into that on a revenue and such a big project business, we are hardly incurring any finance cost. So just explanation if you could give, sir.
You should be happy.
Yes, sir. I'm very happy. I am very, very happy, sir, and I'm very satisfied.
We are, as I said, that is a sort of a few business policies we have taken, that we want to be in the flow solution business. We want to focus on margins in this range because we feel that is wise. And thirdly, we want to protect our balance sheet. So we are very careful and very conservative here, as you can see on this transaction also. So we are today debt free, and we are very, very careful with cash, and our businesses are mostly cash generating. All cash generating, actually.
Right, sir. And sir, we look for NSE listing also, sir, going ahead. Now should be an opportune time for you going for the listing at the National Stock Exchange. So request you to looking forward for the same.
Surely. Thank you.
Yeah. Thank you, and all the best, Agrawalji. Thank you, KK sir. Thank you. Bye.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one. Participant, to ask a question, you may press star and one. As there are no further questions from the participant, I now hand the conference over to the management for the closing comments.
Thank you. Thank you everyone for participating and your interest in our company. Thank you B&K Securities for hosting us. It has been a pleasure, and good evening to everyone. Thank you.
Thank you. On behalf of Batlivala and Karani Securities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.